Hi everyone, my name is Matthew and I'm a funded trader here at AudaCity Capital, and I'm also part of the talent acquisition team. Now in today's video I'm going to be talking to you about 7 mistakes that you guys should avoid when you initially start up trading. I'm actually a relatively beginner trader. I've only been trading for around 2 years with AudaCity Capital, and I would say I've only really been profitable for probably around the last 6 months. So many of the mistakes that I'm going to talk to you in today's video are mistakes that I've made personally, and they're also mistakes that other people on the floor have made. We've all come together to kind of give our top tips that you should really focus on, and hopefully it will stop you guys from making these mistakes when you do first start trading with us. So number one, the first point that I'm going to make is changing your trading strategy. I would say for me, this was the biggest thing that stopped me from being profitable when I first started trading. I was always changing my strategy. I would start off trading, supply and demand, support and resistance. I'd have some success, and then after a few successes, I would go, maybe 3 or 4 losses in a row. I would lose all my confidence, and I would change strategy. I'd be like, this strategy doesn't work, I need something else. I'm looking for the perfect strategy that gives me 90% wins. We know as traders that to be profitable over the long term, it's a probabilities game. You're probably only going to win 60, 65, 70% of your trades at best. But as long as those trades you take more than you lose, than your losing trades, you're going to make profit over time. So changing your strategy, always changing, trying to learn new things, losing confidence that way is never going to be a good way for you to be profitable over the long term. So that would be definitely a massive thing, a massive mistake that me and I've seen many other people make, is changing their strategy too much. Keep it simple, find a strategy that works, know how many losses that you can take in a row, and stick to that strategy. Now, mistake 2, I would say, links in with this quite heavily, and I would say it's not back testing a strategy before you just jump straight on into the market. It's really important to back test a strategy because, like I said with mistake 1, you go with 2, 3, 4 losses in a row and you lose all your confidence, and you want to change strategy. You think, oh, this strategy isn't working, this isn't right, I'm going to change things. If you've back tested your strategy for maybe 1, 2, even you could go back even 5 years if you really want to, you know exactly how many losses that you can expect to have in a row. So there's no need for you to lose confidence when you take that amount of losses. You can have 3 or 4 losses in a row, and that's completely normal as a trader. That's to be expected. You can still absolutely be profitable over the long term with 3 or 4 losses in a row. If you've back tested your strategy, it's an easy way for you to be confident, believe in your strategy, for it to be simple, and for you to stick to that strategy moving forwards. Mistake 3 would be not having and not using a kind of a correct risk management structure. Many people just go straight into the market, they use different lot sizes, they think, oh, I need to trade maximum lot size, and they blow their accounts straight away. Using a risk management structure, risking only 1 to 2% of your capital maybe, or at very least making sure that you're using a good risk to reward ratio, is a great way to enable you to be profitable over the long term. If all you'd have to do is win 50%, you only need to win half of your trades if you have a good risk to reward ratio to then be profitable in the market over the long term. You can win 50% of your trades, but if you're taking home double the amount that you're losing, you're going to win. You're going to make money over the long term. You're going to make incremental gains for your account. And this is absolutely so key. And there are so many traders, me myself, you see a little bit of money in the account and you want to take it straight away. But if you don't wait and you don't get your 2 to 1s, your 3 to 1s, your 4 to 1s, then it's going to be very difficult for you to be profitable over the long term. So this is something that you need to set out before. And again, it links into the first 2 points. This is something that you really need to figure out before you start trading. What is your risk to reward ratio going to be? And if you see an opportunity that you can only get 1 to 1 or less than 1 to 1, then you need to decide whether that's a trade that you're going to take. You need to maybe see it as a trade that you pass up on. You don't take that opportunity. You wait for an opportunity where you can get a better risk to reward ratio, and then you trade the correct way. And then you give yourself a much better chance of being profitable over the long term. Now, mistake 4, I would say, again, I mean, all of these points are linking in with each other, which does make a lot of sense really. But I would say point 4 would be to not hold on to your losing trades. For me, this was, again, like point 1, like mistake 1, changing strategies, this was probably my biggest downfall. You know, the price would have started approaching my stop loss and I would think, oh, you know, what if it hits my stop loss and then it goes down straight my way and I've missed out on all this profit that I could have had. Whereas, you know, the most likely thing is that it would hit your stop loss and it would carry on going and it would go further and further. You know, I was definitely guilty of moving my stop loss up a little bit, you know, moving up a little bit more, moving it up a little bit more. And then you take a big loss. And like we say with the risk to reward ratio, then you're not able to, because you're risking more, you're then unable to get 1 to 2, 1 to 3. You're always sitting at 1 to 1. You're risking too much in the market at one time. You need to cut those losers short because, you know, one thing I say to myself now that I'm profitable is taking this loss going to really affect whether I'm going to end up a successful trader or an unsuccessful trader? The answer to that straight away is no. You know, taking losses is part of trading. Like we say, you can win 50% of your trades and still be a profitable trader. You know, you don't need to win all of your trades. Losing is part of it, and you need to accept that, and you need to be able to move on from that in order to be profitable over the long term. Now, mistake 5, again, links in with 4 and 3, and that is to let your winners run. You know, especially if you're a trend trader, if you're someone that likes to trade with the market as the trade is trending, you know, you need to be able to let those winners, let them breathe, let them run. Don't cut them too early. Like we said, it's super important for you to be having a risk to reward ratio of 1 to 2, 1 to 3, 1 to 4. And if you don't let those winners run, you're never going to be able to really take advantage of those wins to be able to counteract the losses that you're inevitably going to face in the market. It's really, really important. And you know, most of the time, if you are a trend trader, you're going to get trades that go with the market. You're going to be trading with the market, which is fantastic. It's going to pull back on you, and that's the time where you need to say, right, I need to stick to my strategy here, and I need to believe that if I'm in a trend, it's going to pull back, and then it's going to carry on going my way, and it's going to go further. So you really need to stick with your strategy, stick with your plan, and really let those winners run all the way down so that you can make the most of your winning trades. Mistake 6 is letting your losing trades affect your psychology. Now, again, this really fits in with point number 1, where you would have 4 or 5 losing trades in a row and you would change your strategy. It also fits in with point number 2 as well, back testing your strategy, because that gives you the real confidence to take those losses, know that you're still going to be profitable, and move on to the next trade. So as a beginner trader, it is very, very easy to let your losing trades affect your mindset. I certainly did, because I would change my strategy and move on to something completely different. But it is really, really important to understand that losing is a massive part of trading. And if you don't learn how to lose well, it's going to be very difficult for you to be profitable in the long run as a professional trader. You really need to focus. You need to understand that losing is part of it, and you need to be confident with the trades that you are then going to take, and not change your strategy, not change your plan. Point 7, and the last point that we're going to make, is a mistake that you see loads of people make because there's so much information out there, and that is basically taking in too many sources of information. Trading can be really simple if you let it be. By having a really simple strategy, sticking to it, not changing things, it can be very simple and it can be very profitable. Now, a lot of people get caught up following too many social media gurus, taking loads and loads of different courses, taking on so much information that it's impossible to combine it all into one perfect, winner takes all strategy. You need to keep things simple. You need to only take on information if it's really valid and important, if it's going to improve your strategy. Should always be learning, and you should always be looking to improve your strategy. But too much information can definitely overload things. Too many indicators on the charts can make things very complicated for you, and it can lead to changes. It can lead to unsuccessful trading. So that would be the last mistake that I would say that traders make. This has been 7 mistakes that we most commonly see in traders. And it's definitely, a lot of these mistakes are mistakes that I have made through my own personal experience.